Hi, my name is Monique Frederick, the founder of Golden Pinnacle Inc. Welcome. I want to tell you something personal because I think it will help you understand why I built Golden Pinnacle and, more importantly, why what I'm about to teach you could change the trajectory of your business and protect everything you have worked to build. A few years ago, my business was doing well. I had revenue coming in, I had clients, and built up momentum. If you looked at my numbers, you would have said, she's doing great, the business is working. And then I applied for a business line of credit, which is very different than a personal loan and a credit card. A real business line of credit is the kind that lets your company grow on its own terms. And to my surprise, I was denied. The reason I was denied was because, in the eyes of the lender, my business was not structured as a real company. LLCs do not have credit profiles. And without a credit profile, we rely on our own personal social security number. What they saw was a person operating through an LLC. They saw someone that had completed some paperwork and not a corporation built to stand on its own. And to a lender, there is a massive difference between those two things. On a separate occasion, I was trying to get funding for a different business. This time, it was a restaurant that I owned with a couple of partners here in the Tampa Bay area. And the banks, once again, said no. This time, the reason was different. They told us that the business was too risky, and so this time we had to use a lot more of our cash than what we actually had anticipated. Restaurants sit in a category that lenders do not like: high failure rate, tight margins, seasonal revenue. The industry code alone was enough to put us in a box that we could not circumvent, and it was already too late. That's when I learned something that changed everything for me: that lenders have favorite industries, entity types, and certain structures, and others, no matter how profitable they are, they sit at the bottom of their list. If you do not know which category you're in and how to position yourself correctly, you're fighting a battle that you will never win. And those moments, those denials, forced me to look at something even bigger than funding. When I started digging into why my businesses were not fundable, I uncovered something that scared me even more than being denied a loan. My businesses were not protected either. I had no holding company separating my assets from my operations, no trust layer protecting my ownership, no corporate structure designed to keep what I have built personally isolated from the business. I had none of it, and I did not even know that I needed it. I have been operating for years without a true understanding that the way that my businesses were structured left my personal assets exposed: my home, my savings, my investments, all of it. Here's what nobody tells you when you file an LLC online and start operating the business. If your entity is not properly structured, if your governance is not maintained, if your personal and business finances are mixed together, a judge can pierce that corporate veil and come after everything you personally own. And it's not just the lawsuits. Every time I sign a personal guarantee on a business loan, which is what happens when your business is not independently fundable, I was per- I was putting my personal assets on the line voluntarily. I was handing creditors a direct line to my home, my car, my family's financial security. I realized that I had two major problems. My businesses were not fundable and they were not protected. And I looked around and I realized that I was not alone in this, not even close. There's millions of entrepreneurs right now doing the exact same thing operationally. They're working harder than anyone around them, but their businesses are structured in a way that does two dangerous things at the same time. They make funding nearly impossible to access without a personal guarantee. And they leave the owner's personal assets completely exposed to business risk. And even if they do get some funding, it will be a smaller amount due to lack of strategy. And the worst part, most are not even aware of it. They think they need more clients, more sales. They think if they grow just a little bit more, the funding will come and follow, and the protection will somehow take care of itself. But that's not how it works. Lenders do not fund growth. Lenders fund structure. And protection does not come from having an LLC. It comes from how that LLC is governed, how it connects to a holding company, and how its assets are separated through trust and apparent subsidiary relationships, and whether the formalities are actually maintained. An LLC filed through LegalZoom with no operating agreement, no annual meetings, no corporate records, and businesses expenses running through a personal checking account. That LLC is a piece of paper. It's not a shield. Here's what's mind-boggling. I have 2 master's degrees, 2. And in all of that education, all these years, all those courses, not a single one taught me how to structure a business for asset protection or for funding for that matter. Not one class on business credit, not one lecture on holding companies, how they isolate liability, not one lesson on how trusts protect ownership and provide privacy, not a single mention of DUNS numbers, NAICS codes, trade line strategies, or how do underwriters actually evaluate whether a company is worth investing into. They teach you how to write a business plan. They teach you some textbook theory about marketing and accounting, but they never teach you how to build a business that a bank considers fundable and how to build a structure that actually protects what you have. So I decided to learn all of this myself. I enrolled in an extensive program focused specifically on corporate structure, asset protection, building credit, and capital readiness. I did this to accelerate the learning curve and to avoid mistakes that cost other people years and thousands of dollars. And I went deep. I studied how holding companies work, not just as a concept, but how to actually design a parent subsidiary structure where the holding company owns the assets and the intellectual property, where the operating company takes the risk. So that if the operating company gets sued or it fails, everything of value is protected inside the holding entity. I studied trusts, revocable trusts, irrevocable trust, land trust, business trust, and how they add layers of privacy and asset protection that most entrepreneurs don't even know exist. How a trust can own your holding company so that your personal name never appears on public records as the owner of your business. I also studied why certain states like Wyoming give you the privacy protections, charging order protections, and tax advantages that home state simply does not offer. And why other states people assume are the best choice, like Delaware and Nevada, are often more expensive and less protective for the type of businesses most entrepreneurs are building. I studied how lenders evaluate businesses, including 12 things they check in the first 10 seconds, which industries they consider as their favorites, and which ones they completely avoid at all costs, and what separates a business that gets $500,000 plus with no personal guarantee from an identical business that gets completely denied. I learned the entire business credit ecosystem, how to get a DUNS number, how to select NAIC codes strategically so that lenders see your business in the most favorable light, and how trade lines work. And when I say trade lines, I mean specific vendor accounts, tier 1, tier 2, tier 3, that report your payment history to business credit bureaus and build the credit profile that makes your corporation fundable on its own. Which vendors to start with, which ones report to the which bureaus, how to stack them in the right sequence so that your paydex score climbs to 80 and above, how gas cards and fleet cards can accelerate the process, how 0% APR credit card stacking can give you $50,000 to $150,000 in interest-free capital. I learned how to prepare financial documentation that lenders actually want, the P&L statements, the balance sheets, the cash flow statements, and how to coordinate all of that with your CPA so that your tax strategy and your funding strategy are not working against each other. Because most people don't realize that their CPA is optimizing their taxes in a way that actually makes them less fundable. And I even studied what it takes to build an IPO-ready company, the governance, the financial controls, the compliance standards, the corporate structure, the institutional investors, capital markets require. Because some of the businesses I work with are not just looking for a line of credit, they're building companies that will eventually attract institutional capital, seek investment, or position for a major capital event. And that level of readiness starts with the same foundation we're talking about in this webinar. And then I did something that most people in this space never do. I implemented it in my own companies first. I restructured my entities. I set up a holding company. I established the asset protection layers, the trust, the corporate separations, the governance that keeps my personal wealth isolated from business risk. I built the corporate credit profiles. I established the trade line history. I went through the banking relationships, the applications, the denials, the reconsiderations, and the approvals. All of it. And then something unexpected started to happen. People around me started asking questions. They saw what I was building and they wanted to know how. So I started helping them, walking them through the same tedious process. And that's when I realized that this was not just a skill I had learned for myself. This was something that was meant to be shared with thousands and honestly millions of entrepreneurs, and they desperately, desperately need this. And what makes this process even harder for people, such as myself, was that when I did try to get answers, I got conflicting advice. I would ask one professional and got um, and, and get one answer, and then I would ask another professional and get the same question to get a completely different answer. An attorney says one thing, a CPS says another, a business credit company says something completely else entirely. The other thing I realized quickly was that the banking industry changes their requirements according to where we are in the economic cycle. Nobody has the full picture. Even the course that I had taken did not have a rookie program that teaches people how to take their business from zero to millions. Attorneys know structure, but they don't understand business credit. Credit companies know trade lines, but they don't understand asset protection or tax strategies. CPAs know taxes, but they don't understand how the strategies affect fundability. Everyone has a piece, but nobody was putting it all together. Golden Pinnacle was created to put it all together, more complete and more insightful than any other program out there. Not just the funding piece, not just the credit piece, not just the protection piece. We have the entire system. We have the blueprint about how to get this all done and have the relationships to make it all happen. Golden Pinnacle exists to help entrepreneurs do three things. First, structure their business properly with the right entities, the right formation state, holding companies that separate liability from operation, trusts that protect ownership and provide privacy, and governance that holds up if it's ever tested. Number two, how to build real corporate credit through strategic trade line development, DUNS and NAIC positioning, and credit profile management so that the company has its own credit identity that's independent from the owner. And third, become capital ready with banking relationships, financial documentation, the insurance, and the positioning that makes lenders say yes without hesitation and without a personal guarantee. Those are the three pillars: structuring businesses, building credit, and securing capital. And whether you're a brand new business owner just trying to figure it out with your first entity or an established company preparing for an institutional investment, those three pillars are what determine whether you have access to capital and whether your personal wealth is protected while you build. And because every owner is at different stage, we built Golden Pinnacle to meet you where you're at today. Some of you are just getting started. You have questions, you need clarity on your current structure, whether your entity type is right, whether your personal assets are actually protected, whether your business is even visible to lenders right now. That's exactly what our foundation audit is designed for. A single deep dive session where we review everything, identify your top risk, and give you a prioritized action plan. Some of you are ready to build, you know your structure, you know that your structure needs some work, and you want a full blueprint plus hands-on implementation. The entity design, the holding company setup, the asset protection layers, the corporate credit position, DUNS and NAICS alignment, the documentation, the capital readiness plan, that is all our business readiness program. Some of you are ready to accelerate. You want everything built and you want our team managing the entire process. New entity formation, corporate credit build up from tier 1 trade lines, all the way through no PG funding applications, banking setup, website, and funding preparation. That is the Capital Acceleration Program. This is our most comprehensive service. We also have a self-paced course, the No PG Corporate Structure and Funding Blueprint, for business owners who want to learn the entire system and implement it on their own timeline. It's 12 modules, nearly 80 deliverables, every template, every script, every checklist, every trade line vendor, every lender, all laid up step by step. And for clients who have already built their structure and credit profile, we offer an ongoing credit maintenance and monitoring because what you build has to be actively maintained. Trade lines need activity, compliance deadlines need to be met, credit reports need monitoring. We handle all of that on a monthly or yearly retainer so you can focus on running your business. I will share more details on all of these during our webinar session, but I want you to know up front, wherever you are in this journey, whether you're forming your first entity or preparing for an institutional capital raise, there is a path forward with Golden Pinnacle, and I'm looking forward to serving all of you guys. See you at the webinar. Thank you.